affected me a lot, actually, especially since the pairs I trade mostly, really similar to a lot of the other guys, is AU, EU, and UCAD. And especially in AU and EU, definitely lately, they've shown a lot of the reversal patterns that we're about to go over, like double tops, head and shoulders, and stuff. Recently, those have popped up a lot, and those are really helpful with your trading. Like, that's really good confluence, is seeing a double top or a head and shoulders, know if the market's reversing. And the candles too. Is this candles too, right, for this class?
Yeah, the candles. We'll go over the candles too.
Okay, yeah, that's really clarifying, because I used to look at the candles and just be like, okay, why does this one have big wicks? Like, what does this mean if it has a big wick? I know there's like, I should be able to use that information to my advantage. And after this class, it helps you realize how you can do that and how you can improve your trading game, your trading efficiency using those reversal patterns and those reversal candles.
Okay.
So, like I said, before we started the intermediate section is really one of those key turning moments of the whole training, because this is where a lot of the eye-opening things and epiphanies happen. So without further ado, let's go ahead and get started. All right. So first of all, we're going to go over one candlestick patterns, two candlestick patterns, and then market patterns. So you know about the candlesticks, right? To where you got the body, the wick, and stuff like that. So I'm going to show you pretty much different variations of different type of candles and what they mean when you see them. All right.
Okay.
So the first pattern that we're going to go over is called a doji. All right. A doji is basically, you see how this candle is, to where this is a wick, believe it or not. This is a wick, and this is a bottom wick, and this right here is a body. So right now, this looks like a cross or a T, right? But believe it or not, this is a candlestick. And the reason why it looks like this is because the market at one point in time, just like the wick show you, came up here at one point, came all the way down here at one point, but ultimately closed in the same area that it opened at.
Yeah, open and closed at the same spot.
Exactly, and that represents indecision. Okay, so you see how the market didn't want to go here, didn't want to go here, so it just came back to where it was. Same thing right here. Now, you have different variations of a doji. You have the dragonfly, stuff like that, but do not worry about that at all. All that matters is you see a candlestick that has that, it closes pretty close to where it opened at, it's a doji. Don't worry about the different variations, stuff like that. If it looks like a cross and a T like that, it's a doji, so all that needs to matter to you is indecision.
Even if it's just slightly off?
Yeah, even if it's slightly off. Like, so we're going to go over real market, like, we're going to show you real market examples. But yeah, even if it's like slightly off or the body is like a little like thick like that, it's still a doji. All right?
Okay.
So, Keaton, any thoughts on doji? Anything you want to add to
that? You covered it pretty well. Just, yeah, doji's one of the biggest ones that you'll see most often for sure, is something that, and again, like with decision candles, it's not necessarily you look for an entry right there, but that's just when you know to like start looking out for a possible reversal,
So what's better to use, the candlesticks or these dojis candlesticks?
Well, they're both candlestick. These are just a type of candlestick.
Yeah. Well, is it doji the better one to use, or is it kind of just a preference?
It's more of a preference thing, because like Keaton was saying, like once you start to see these candlesticks line up and stuff like that, it kind of puts you on notice that a reversal is about to happen or something is about to happen. That's all it really is.
Okay.
So I'm going to go over some more here. Here go right here, some examples of some dojis. So like I said, you see how this doji, it's like this. It didn't necessarily close exactly where it opened at, but it's pretty close. And you got this little variation right here. So right here, you see this trend line right here. And every time the market came up and hit the trend line, it bounced off. Came up and hit the trend line, bounced off. Now you see, as it came closer to this trend line, the market got indecisive with a whole series of doji candles. So therefore, like he was saying, when you start to see like doji back to back to back to back, it's kind of letting you know, like, okay, market's getting indecisive, so it's going to make a move somewhere. And then your move is right here off of this candle, and then down for the sell. All right? Let's go some more. So the next one is the hammer. All right, the hammer. Basically, like I said, it's another candlestick. So basically with this candlestick, it looks like a hammer. It looks like Thor's hammer, right? So basically what happens with this is, you pretty much got a long bottom wick at the top, and then you just got like a thick body at the, long bottom candle wick at the bottom. And then you have a body at the top that is like thick like this, creating that hammer formation. And again, every single one of these one candlesticks I'm showing you are just showing you indecision in the market. So when the market comes down all the way down here and then comes back up here and eventually closes right here, that's still indecision. It's not necessarily in the middle of the body of the wick and stuff like that, but it is still indecision and showing you that the market doesn't really know what it wants to do. All right.
Okay.
So it can be a bullish hammer or a bearish hammer. Anytime a body's on top of a wick, it is a hammer. All right.
Okay.
So here goes some more. Just kind of like I said, just show you more different ratios of it. Even if you got a little peak of this little wick up here, it's not too crazy. So therefore, it is still a hammer. All right.
Okay. All right.
So
hammer means indecision.
yeah, every single candlestick I'm going to go over, they're just representations of indecision. Every single one. All right. So like I said, it'll come together at the end. But yeah, every single one represents indecision. So right here, this example, you got the market coming down, coming down, coming down, and then you see the market at one point in time and made a move all the way down here, but eventually came back up to close up here, creating that hammer formation, and then you got, you know, a reverse in price. So therefore, like I said, the market at this point, you never know. It could be like a support or resistance lineup right here. It could be a key level of fib, like some 618, 382 retracement right here. And then that's why there's probably, you know, letting you know why if the market's reacting to it the way it is like this. To where it's like, okay, it didn't like this area, ran away from it, came up here, and then started reversing. All right.
Yeah. Okay.
Same thing at the top right here. You know, it's pretty much the same thing. So in this situation, it's not like price came down here and ran away from it, which it did. It's not like the same right here, but it's still, even though you have a hammer at the top of a trend, it's still a hammer, and it represents indecision. Because they like to give them different names. Like this should be considered a hanging man, and only this is a hammer. But like I said, that only creates confusion. Do not.
Hangman is when it's on the top.
But that's what I'm saying. Don't think of it like that. It's just a hammer. If it has a long bottom wick at the bottom and then a body at the top, it is a hammer. Because like I said, trying to name it and being too specific with it, it can throw you off. You begin to think too much. So therefore, it's like if you just see it like, oh, indecision, something's going to happen, you know, or be on the lookout. All right.
Okay.
Keaton, anything to add on that?
No, nothing to add on the hammer and stuff right now. It's pretty straightforward for the most part for now.
Okay, cool. So the next one we'll go over is a shooting star. All right, a shooting star. Basically, what happens is pretty much a hammer upside down. Okay, so basically you have a bottom, you have a body at the bottom, and then a long wick at the top. So you see, previously the hammer was a long wick at the bottom, body at the top, but it's the exact opposite. Long wick at the top, body at the bottom. And basically it gets its name to where if you're going up on an uptrend and you see like the price shoots up at one point in time, but ultimately came back down to close down in this area. So therefore you got that shooting star formation representing indecision. All right. So here goes examples of it to where, like I said, at the bottom of it, like I said, they try to give it different names. It's still a shooting star. All right. So right here, this is the perfect example I was talking about. The market is coming up, and then boom, shoots up here at one point in time, and it comes down here to close. So therefore, boom, you got that shooting star formation representing indecision at this area. So once it starts to make those candles coming down from it, boom, now you see, okay, you got yourselves a reversal. You could hop in and sell and stuff like that. Same thing over here. Market's coming down, coming down, coming down, have an indecision candle pop up. The market's indecisive in this area for some reason. Like I said, we're going to go on the charts and show you real life examples. So
that's what you want to buy.
Yeah, you know, so that's why, you know, if you see like a support right here, and then you see indecision at the support, it's letting you know that the market's trying to bounce off of that support to go up.
Okay.
All right, so here goes another example of the shooting star. Again, coming up, coming up, coming up, and then boom, shoots up here at one point in time, then comes down, closes down here, and then now you got a reverse in price, all from this indecision up here at the top. All right. So
can there be multiple hammers like back to back?
Yeah. So whenever you like, it's never going to be like, you know, always just this perfect unless you're looking at huge time frames. That's why I was saying, like, going over every single these ones individually, when you see like a series of these candles, whether they're dojis together, hammers together, or shooting stars together, or all three of them together, it's all representing indecision. The market's getting indecisive.
Okay.
So right here, the next one we'll go over is a pin bar. So Keith, do you want to start off on the pin bar with this one, or you want me to get it?
Yeah, I can talk about the pin bar for a second.
All right, go ahead.
Yeah, so pin bar, as you can see on the left, you have the bearish pin bar. Basically what a pin bar is, it's real similar to a hammer or a shooting star, but the only difference is that there's a little bit more wick. The where you normally wouldn't see a wick at all, or you might see a little bit of a peaking wick, you're going to see a little bit more of one.
Okay.
They all still mean the same thing. They all mean indecision in the market. They all mean possible reversal, but that's just how to identify them differently. A pin bar is going to have a little bit more of a wick on the smaller side, and a shooting star and a hammer is going to have little to no wick at all on the smaller side. Both still have really long tails, though.
Okay.
Exactly. Perfectly explained right there. Like you said, on the hammers and stuff, there's no like, extended wick. That's how you tell if it's a pin bar or not. You have that big wick on the one side of it and then a smaller wick on the other side, giving it that pin bar formation. So therefore, again, like I said, market's coming up and then boom, shoots up here at one point in time, but ultimately wants to come down because that's what this candle is trying to tell you. It's getting indecisive right here, and then boom, you get your bearish candle that comes out. Same thing if it was the opposite. You got a bearish move coming down, you get a pin bar, comes all the way down here, runs away from that area, and comes up here and closes, and then you got a bullish candle on the other side.
Mm-hmm.
So like he was saying, regardless of what candlestick it is, they all represent indecision. All right, they're just showing you the different types of ones, so you can be able to identify them.
Okay.
All right, so we went over all of the 4 single stick candle formations. All right, we went over the doji, the hammer, the shooting star, and the pin bar. Okay, the reason why they call it single stick is because they're only one candlestick. You can identify these just by looking at one candlestick. Like, oh, that's a pin bar. You look at this like, okay, boom, one candlestick, shooting star. You look at this like, okay, one candlestick, that's a hammer.
Mm-hmm.
Look at this. Where is it? Okay, boom, one candlestick, doji, 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 doji. They're all one. So the most common 2 candlestick formation is the one we're going to go over. Okay. So these are 2 candlestick formation. All right. This is called the engulfing pattern. All right. So Keaton, again, do you want to take this one?
Yeah. So the engulfing candlestick, as you can see, whether it's bearish or bullish, basically what you're going to start off with is we'll look at the bearish side first on the left. You'll have that small bullish candle moving up, not necessarily small, just bullish candle moving up, and then immediately the next candle, if it's a bearish engulfing pattern, it's going to be a candle that exceeds the length, a bearish candle that exceeds the length of that bull candle engulfing it. That's why it's called engulfing. That on the left side right there, that red candle engulfs the green candle, and that's most of the time that's going to lead to a bearish pattern in the market. Obviously, you never use just one thing to tell where the market's going to go, but that's just another form of your confluence that you're going to see that's going to show you a possible reversal or possible movement in the market as an engulfing pattern. You get that big red candle engulfing the smaller green one.
Yeah, so pretty much like I said, it's what it sounds like, engulf. Whenever you have one candle engulf the other, like you said, that's usually a good little reversal sign. But of course, like you said, you never just want to use one thing to determine where the market is going. It's all about confluence, which you'll learn, I think, in intermediate 2. So basically, like I said, you have the market, let's say it's coming up, and then you get this big, just bearish candle coming on the other side, just engulfing this one. That's an engulfing pattern right there, and it's a good reversal sign. Same thing on the opposite. Market coming down, then you got this candle, pretty much engulfs this whole candle, and then it's going up for the upside. So the important thing to pay attention to with the engulfing candles is the body, all right?
Yeah.
So you might have a small wick here, or a small wick here, or a huge wick here and a huge wick there. If this body engulfs this previous body like that, that is an engulfing pattern, because it's all about the body. Because what matters is where price opened and where price closed at. Not necessarily where it's been. The foot, that's just showing you the candle wicks or the footprint, just showing you, give you clues of information about what happened in this area, or what could happen. But ultimately what matters is these bodies. These are going to tell more of the story, all right?
All right.
So there's, like I said, examples here. Market coming down. Then boom, you get this bullish engulfing pattern. See how this one's huge and just pretty much engulfs that one. You can put this bear candle inside that bull candle, and it'll pretty much be, it just engulfed it all the way. And then now you got your reversing price. So there, same thing here, market up and up and up and up. And this bearish candle pretty much engulfs the previous candle entirely, showing you a switching direction, a switching momentum to where the market now wants to start coming down for either an entire reversal trend, like a whole trend reversal, or just a reversal for some pullback. It just all depends on what's going on. All right, so here goes some different variations of what we was talking about earlier, to where not necessarily paying attention to the names of, you know, certain things that are extra, because I'm a simple guy. All right. I'm a simple guy. I like to weed out the bullshit and just pretty much show you what's real and what's not, and what matters and what doesn't. So therefore, right here, they call this a morning star, to where basically if you have like a variation of a bear candle, doji, and then a bull candle, they call it a morning star. But ultimately, what is this? All this is showing, this is just a doji. It's just a doji at the end of the day, showing you that markets are indecisive down at this area, and then you see the switching direction. That's all it really is. Same thing up here. Evening.
Yeah, just like you said it would.
Yeah.
Right.
Yeah, exactly. So like I said, they call this the evening doji star, which is a bearish move down. So therefore, we got an uptrend, 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 and then you have to have a bullish candle, doji, and then a bearish candle follow. Again, don't matter. Does not think about that, because at the end of the day, simple. What is this? It's just a doji. The doji is what really triggered this whole thing right here. All right? That's all that matters. So that's why I bring up this picture. Just like I said, keep it simple. That's all you have to do, because when you overanalyze stuff, you start making bad decisions. You start overthinking your decisions. And then they have this whole, you know, what's the old saying? Paralysis by analysis, to where if you keep on analyzing, you start to get stuck. You just get still, like, I'm not trading at all. You know, you don't want to do that. You're stuck in that. All right. So let's go on the charts before we go over that. Let's go over the charts and pretty much show you what we was talking about as far as the different.
Let me hold on. Let me plug in my headphones. I'm running out of battery. One sec.
Okay, go ahead. Stuff.
Reversal patterns and these reversal candles that you can remember is they're not necessarily a full-on indicator of the market is 100% reversing, like an uptrend's turning into a downtrend. Because if you look, like, in certain spots where the market is uptrending or downtrending, you can see a few reversal candles in a row, but that doesn't necessarily mean the market automatically is about to change directions completely. It doesn't mean get in on a trade. It just means that it could just mean the market's exhausting, from buyer's exhaustion, seller's exhaustion, which is basically just means that when the market's overbought, it's going to slow down a little bit before it continues in that direction or before it switches direction. And indecision candles basically are just another sign, like I've said already, but they're just another sign of whether the market could be either pulling back or changing trends. And there's just something you want to pay attention to just to see where the market's about to reverse, and then look for an entry candle after that.
Okay.
All right. So now I'm going to go over the last section. We're going to go over the 3 reversal patterns. So therefore, like I said, we don't have a candlestick. Basically, what we just went over with you is candlestick psychology. So right here, this is pretty much showing you the psychology of the market, to where it's just like, okay, these little candles are telling you the market is indecisive. It doesn't know where it wants to do yet because of all this movement they just did. It's still trying to make a decision. That engulfing candle, that engulfing candlestick, stuff like that, is basically a decision to come down or to go up. If it's an engulfing candle to the top side. So, Keaton, go ahead and get this one, man. Double top.
All right, so a double top, it's definitely one of the most common reversal patterns that I see in the markets that I look at. And basically what it is pretty much just an M shape is a good way to break it down. As you can see right there, you got the market coming up to that point 1, then dropping back down to the same point from where it came from, going back up to point 2, and dropping back down to where we see point 3, which point 3, that line right there, that's called the neckline of the double top. And that's really important to remember, because the neckline is when you get in on your trade. Once it closes, breaks that, once a candle closes under that neckline, as you can see, that big long candle that closes under there, that's usually when you look for an entry. It doesn't mean you necessarily go for the entry right then, but that's usually when you look for one. A double top's just a way that we can look at markets, use it for our analysis, use it to see when we can get in on trades. And also an important thing to know about double tops regarding the neckline, a lot of times when you have a break of the neckline, it'll come back up and retest it before it drops. So it's just good to know that, just so you know, not to be surprised if it drops below a neckline and then it starts to go up a little bit, or it starts to show indecision. That's really common. That just means it's probably going to retest that neckline and then make its movement down.
Okay. Yeah, like you said, it's, you know, just a pattern. It's a reversal pattern. It's a bearish reversal pattern, right? A double top is a reversal bearish pattern. So therefore, like you said, it comes up and makes pretty much two tops, giving it its name, but it looks like an M. So whenever this happens, the market is coming up, it makes a new high, retraces, and tries to make, you know, a higher high to maintain its uptrend structure, but fails to. And that's when you get that second top and it starts to fall down. And then this neckline right here, like you said, once this is broken, that's when you enter in on a double top. So so basically off of this candle right here, this is a very long one. So to close this candle, you would enter in on a sell for that candle. All right. So that's textbook how you do it. But you know, usually, like you said, just like anything, anytime a level is broken, it comes back to retest. You know, so sometimes it does come back to retest, sometimes it doesn't. So the way I trade it basically is I would get in on a sell whenever the candlestick closes below the neckline. Then I'll put a pending trade where the neckline is in case it comes back to retest. So if it does come back to retest, now I have two trades going in the sell in the same direction. But if it doesn't, I'm still in a sell for the win. All right, so let me show you another example. So boom, like you said, you got the first top coming here, neckline gets created, second top comes here. Like I said, the reason why they form, this could be like a very strong resistance level right here or something. All right, so basically, like I said, this is the uptrend. Market comes up, retraces, and tries to make a higher high, and it fails to because this resistance area is just too strong. But then it makes that second top and it starts to come down, and then again, the double top is confirmed when the neckline is broken. Just because it makes two tops right here, and it's like right here coming down, doesn't mean it's a confirmed double top. You don't want to jump the gun, all right? You want to wait until it comes down here to break the neckline and then get in, all right?
Okay.
So basically, like we were saying, whenever it does come down here, you know, it can come down here, then once it comes back up, it'll retest this area to bounce right off. So that's what Keaton was saying. So usually, like I said, whenever I do it, I'll have, whenever it comes down here, the candles are closing below this neckline, I'm gonna get in on a sell right here, and then I'm gonna put a pending trade right here, just in case I catch the retest. So that means for the time being, you take a trade down here for a sell, it'll come up. It's gonna be in the negatives, but you know, once it comes down here, I mean up here and retests this neckline area, and then hits your other pending trade, and then boom, it starts to come down. This one gets in profit, and this one gets in profit from the jump, and now you got two trades in profit going in on sell. All right.
Okay. All right.
So here goes another market example what they look like. So when I show you these lines and stuff, it's basically showing you the concept of how it works and what it does. All right. So that, like, you know, it's never just this clear cut, of course. This is trading. So therefore, when you look at the on the market, you can obviously see the double top areas, right? So they drew the lines right here to pretty much show you. The neckline is kind of slanted because, you know, you pretty much have to draw it accordingly to how whichever neckline forms. So right here again, or it's coming up on this little uptrend and stuff like that, makes the first top. And as you can see, what we just went over, why did they make a reversal? Because look at all these indecision candles happening in this area. And after that, boom, got an engulfing candle that comes down. Comes down here, forms a neckline, puts a retracement, then it starts to come up again, and then boom, makes a second top. And what you have again, indecision candle. You got a big old, just long pin bar candle right here. Again, showing you indecision in this area. It doesn't want to go there. So then you start to see it come down. So you see, this is the neckline, right? And as it came down here, as it came down here, basically I would get in on the probably the close of one of these candles, but ideally this one. You don't want to enter in on an indecisive candle, all right? Because why? It's indecisive. All right, so therefore you want to get on a candle that knows where it wants to go, which is this candle right here. It's a very decisive bear candle. So I'll get on the sell right here and put a opinion right here just in case it comes back to retest. But obviously on this specific double top, it did not ever come back to retest. All it did, like from where you entered in, it came down, you would get into immediate profit. It retraced here and then started to drop some more.
Okay.
So again, here goes another one. This is the Euro USD. The last one was this. I can't even see. But yeah, this is the Euro USD. So therefore, again, got the market coming up on a little uptrend stuff, right? Then boom, indecision. Engulfing candle came down for retracement to come down, and then as the market comes up to make a second higher high to maintain this uptrend structure, it gets rejected because for some reason this area is just too strong to where the market is not letting it pass through, and then it starts to come down and come down. So basically, on this candle right here, I would get in on this candle, the close of this candle, which is down here, because that was the candle that broke the neckline, and then put a pending where the neckline is. So as you see on this example, the neckline did come back to retest this neckline. So therefore, I would have got in on the sell right here, would have went to profit, and then boom, it came back and retested that neckline. And you see right here, did it perfectly. So it would have hit my pending trade and my already trade that got going, and then after that, it's a straight drop. success.
Yeah.
All right, so pretty straightforward, right?
Yeah.
So let's go and show you one. So right here, this is a double top right here off the bat.
I
So
see it.
neckline is pretty much right here. All right. And basically, like I said, you got a market coming up, boom, gets rejected this area, comes down, tries to go up, make a higher high, gets rejected again, comes down. So on this candle right here, once you see that candle that closed below the neckline, I'm getting in on that one for a sell. Put a penny right here, it's come back to retest. And as you see, it came down and boom, it retested. And after that, you get a little bit of consolidation here, but after that, it drops. All right.
Okay.
So let's show you another one. I know there's one over here. Yeah, I changed the hour. So we have another double top that happened pretty much right here. You see it?
Yeah.
So neckline is pretty straight across. This one's not slanted at all. This one's straight across. All right, so boom, market came up. You see the indecision at this area, right? Pin bars and shooting stars, stuff like that. It came down, made the neckline, tried to go up to make it higher and higher, failed with a whole bunch of indecision, and then dropped dramatically. So therefore, in the close of this candle, that's where you want to get in. All right.
At the close of it?
Yeah, and you have to get on the close of a candle that closes below the neckline. So right here, let me zoom in instead of being so far away. So right here would be your ideal entry on the close of this candle. All right. And then, of course, put your penny right here. But if you want to do it the textbook way, you want to wait until it comes back to retest, which it did. Came back to retest the neckline. And right here, once it pretty much comes down from it, that's your entry point. And then as you can see, you could ride that wave all the way down.
Okay.
All right. These things, like I said, they work, man. Like anytime they pop up, they work to perfection.
So that's good. That's your go-to right there when you see that.
Oh yeah, I mean it should be. Yeah, it should be. So like I said, once you see it form and then it breaks that neckline, you deal with this candle. Oh yeah, that market's coming down for a good little time.
Okay.
All right, so let's pretty much go to the next candle. So we have 2 minutes left. Let me go ahead and end this and send another link into the group. I'm gonna comment on the post I already made. All right.
All right.
All right. So Keaton, you heard me?
Yeah, for sure.
Okay, I got you. All right.